Good day, I am Jomaris Basio and I am here to present Accounting System for Hospital. Before that, let us tackle what is meant by accounting system. Accounting system is a set of accounting processes with integrated procedures and controls that is referred to as an accounting system. This system's purpose is to record business transactions, aggregate those transactions, and generate reports that decision makers can use to monitor, analyze, and improve operations. However, historically, accounting systems were complex series of manual calculations and balances. An accounting system is made up of 5 key components. Each component serves a distinct purpose and completes a distinct step in the financial reporting process. The 5 components are source documents, input devices, information processors, information storage, and output devices. Source documents, the first one, are business documents that track business transactions. These documents are created as a written record of a deal being made or a transaction taking place. Documents like invoices, purchase orders, and receipts are created at the end of a business event to keep a record of the original transaction. Input devices like barcodes, scanners, keyboards, and modems are tools used to enter transaction information into the accounting system. These devices help employees enter source documents into the system. Information processors take the raw data from the input devices and post it to the ledgers, journals, and reports. Processors like computers and software program process the data so decision makers can use it. Information storage is the component of the system that stores the reports and ledgers created by the information processors. Most modern accounting systems are computer-based, so the storage devices usually consist of servers and hard drives. However, file cabinets or those manual setups are still considered storage devices. Then output devices like monitors, printers, and projectors are any devices that take information from the system storage and display it in a useful way so that it can be used. How to build an accounting system? First thing is to use what we know. All business-related documents such as bank statements, invoices, bills, receipts, tax papers, and legal and governmental documents pertaining to your company should be kept secure. Engage the services of a tax professional who can advise you or us on which documents we must keep on file indefinitely and which documents we can discard after a set period of time. Next is to file your documents. It's critical to set up a filing system with a different file for each type of financial paperwork. These files can be physically or virtually stored or both. Create a file for all papers that require action and then move them to the respective files once completed. Third is to decide the accounting needs. Decide who will manage your accounting needs based on the complexities of the business, financials, and the own degree of comfort. We may handle it ourselves or employ someone to help or outsource the full accounting processes to a third party or company or individuals who specialize in small business accounting. Hire a professional. You might or we might hire a part-time or full-time bookkeeper if we're thinking about hiring professional support. The services of a bookkeeper are best suited for startups that do not intend to develop significantly. A bookkeeper can assist you or us in establishing effective record-keeping processes, processing financial transactions, and preparing financial statements. It's a good idea to engage an accountant if we're running a developing company or a complicated business such as hospitals. A small business or sole proprietorship may find it challenging to afford an accountant. But, however, prepare the books ourselves or hire a bookkeeper and use the accountant's skill for tax planning at the end of the year. But we must make sure that our accountant or bookkeeper is knowledgeable and trustworthy. Next is to pick our accounting method, whether to use cash or accrual method. It is also important to ask experts to assist us in determining which option is best for our company. Sixth is to open a business bank account to keep track of our cash flow and streamline of our accounting procedures. 7 is to record our transactions, of course. When we can offer receipts for each transaction to customers, you may know you have a trustworthy accounting system in place. Using your monthly bank and credit card statements, the system should assist in reconciling the account. So, every time there is a transaction, it is really important to record it, of course. So, because we need an accounting system, most hospitals use an accounting software. So, what are the features that medical accounting software must have? First is to have medical materials management. It means organization of the acquisition and distribution of supplies, particularly any drugs or lab materials that have a limited shelf life. This eliminates the possibility of missing merchandise and or charges or debt. Next is patient insurance / CMS billing or content management system. The bureaucracy connected with healthcare accounting adds multiple layers of complexity that most companies don't have to deal with, such as co-pays, reconciling EOB filings or explanation of benefits, and dealing with the centers for health services like PhilHealth. Coding information, claim scrubbing, and electronic claim submission are all common features of this system that the system must have. Third is integration with electronic medical records. Patient notes, demographics or their place, family, medical histories, and prescriptions are all tracked in electronic medical records or EMRs. E-prescribing, lab and medical device testing, integration, and voice recognition note software are all common features. For most buyers, integrating with that data is important in the quest for all providers to adopt the EMR, electronic medical record technology. Next is the HIPAA compliance, or the Health Insurance Portability and Accountability Act of 1996. It is a federal law that required the creation of national standards to protect sensitive patient health information from being disclosed without the patient's consent or knowledge. If the system incorporates patient data, we'll need a solution that not only performs the required accounting operations, but also adheres to HIPAA's privacy standards. So privacy is very important also. Fifth is integration with patient portals. So, patients have access to services such as medical records, appointment scheduling, medication refills, and online bill payment 24 hours a day, 7 days a week. Patients can use these portals to examine bills and make payments, of course. Next is computerized accounting software. Different firms' profitability and financial performance are evaluated using computerized accounting software because manual accounting is prone to human mistake. It has become obsolete in recent years. As a result, businesses of all sizes rely on the best accounting software to simplify and eliminate errors in the difficult accounting work. Computerized accounting software is a program that may be placed on computer to help manage the business financial transactions, reports, data, and statements more efficiently. The software can also be accessed remotely via mobile data or a strong Wi-Fi connection on our mobile. There are numerous solutions available if you are searching for a results-driven accounting tool for your company. Each accounting software solution has its own set of features. As a result, before deciding on accounting software, it's a good idea to evaluate the various options to see which features are the greatest fit for the company. So, the types of computerized accounting software are ready-to-use accounting software. These are appropriate billing application for us if we own a small business. Accounting software that is ready to use is simple and inexpensive or cheap. However, ready-to-use accounting software may not be able to interact with other systems in the firm. Customized accounting software. The accounting software is designed to meet your company's specific accounting requirements. Accounting software that can be customized is appropriate for medium and big enterprises with multiple divisions like hospitals because it entails additions and modifications to the fundamental accounting software. The cost of customized billing software is somewhat higher than other billing software options. Last but not least, using this program necessitates specific training to use this kind of software. Commercial accounting software. Small and medium-sized business will benefit from this solution. It not only takes care of the company's accounting needs, but it also creates reports, data, and graphs to show how well the firm is doing financially. To help narrow down the many options, because there are a lot, Global RPH has partnered with Software Advice. It is a company that specializes in helping buyers or business owners find the right software for their practice. Global RPH was created with a vision of producing practical and user-friendly software and tools for the busy clinician. For busy businesses. It all started with the development of intravenous dilution guidelines for several parenteral medications. Samples of These softwares that Global RPH recommends are Multiview, NetSuite, Sage Intact, Sage Fixed Assets, Financial Force, Financial Management, SAP ERP Core Finance, and Oracle JD Edwards. There are also other systems that is used specifically for some medical specialty practices like urology, psychiatric, physical therapy, oncology and hematology, OB/GYN, mental and behavioral health, and a lot of. Accounting in the healthcare industry is difficult. Aside from the usual challenges of revenue recognition and accrual accounting, hospitals and doctors' offices must additionally manage a sophisticated system of payers or customers that includes private insurers as well as government programs. Furthermore, as the healthcare system continues to evolve away from fee-for-service compensation and toward value-based reimbursement, it is more vital than ever to hold providers accountable for cost and quality. It is critical to be able to explain the foundation of hospital accounting for a variety of reasons. First and foremost, the accounting team must determine which systems and healthcare accounting software are required. Second, non-accounting executives must grasp why it is critical to invest in hospital enterprise resource planning solutions and what they accomplish. Accrual accounting is used by the majority of large firms. Accrual accounting is frequently used in the healthcare industry. Accrual accounting refers to the practice of recording income and expenses as they occur rather than when payment is made. If you obtain a service in January and pay for it in February, for example, accrual accounting records the cost of the service in January. Cash accounting, on the other hand, records when cash is received and records the charge in February's books. The key advantage of accrual accounting is that the books will more precisely reflect the hospital's current financial situation. Paying rent for the entire year on January 1st, for example, would result in a large cash outflow, which would be reflected in cash accounting as a loss or lower profit for the month of January, followed by increased profits for the rest of the year. Rent expense is spread over the full year in accrual accounting, so that each month's profit represents the goods and services provided and consumed during that month. The cash method is much simpler than the accrual method. Under the cash method, expenses and revenue are only recorded when the cash is on hand. While some industries such as agriculture industry prefer the cash method, the healthcare industry lends better to the accrual method because payment can sometimes take months to be received. The accounting standard for most hospitals, public companies, and nonprofit organizations is the Generally Accepted Accounting Principles, or GAAP. It is a set of accounting rules that ensures the consistency of income statements, balance sheets, and other financial reports from one company to the next. GAAP includes general principles that apply to all businesses, industry-specific standards such as those for healthcare, and additional standards for nonprofit organizations. So there are 10 main principles of GAAP. The principle of regularity, the adherence to GAAP rules and regulations as a standard. The principle of consistency, the application of the same standards throughout the reporting process to ensure financial comparability between periods. The principle of sincerity, the provision of an accurate and impartial depiction of a company's financial situation. The principle of permanence of methods, the commitment to using procedures used that are consistent, allowing comparison of the company's financial information. The principle of non-compensation, the reporting of both positives and negatives with full transparency and without the expectation of debt compensation. The principle of prudence, the commitment to using fact-based financial data representation without speculation. The principle of continuity, the commitment to operating a business while simultaneously valuing assets. The principle of periodicity, the reporting of revenue during the appropriate accounting period. The principle of materiality, the commitments to fully disclose all financial data and accounting information in financial reports. And the principle of ubi reme fide, or utmost good faith, the commitment to honesty in all transactions. In addition to generalized GAAP principles, hospitals and healthcare services must contend with several industry-specific concepts. And this includes the accounts receivable arrangement in hospitals. So it is one of the most complicated situation or transactions. Patients, private insurance, government programs, charitable groups, and others may pay for them, for the customers or for the patients. Payment for services is frequently split between two or more parties, such as the patient and their insurance company. Payment terms may differ depending on the insurance company or government program, and the hospital may or may not be able to change them. Hospitals also employ a variety of billing methods, including accounting for individual operations and materials used, flat cost, and daily rates. So hospitals are compensated in a variety of ways for the services they provide to patients. Government, commercial payers, and employers are all developing new value-based payment models. The mode of payment determines when revenue is recognized. So the following are the common approaches. First is case basis. This payment mechanism, also known as prospective payment, has been the dominant payment method for decades. Regardless of how long a patient is hospitalized or how many resources are spent during the stay, the hospital or health care system gets paid a defined cost for the care of a patient with a specific ailment based on the patient's level and diagnosis including comorbidities. Next is bundled or episode of care. A provider is paid a set of amount for services required by a patient over the course of a care episode, such as the times a stroke patient is admitted to the hospital and 30 days after discharge. Multiple care sites such as post-acute care centers are frequently included in such arrangements with which the hospital must have contractual agreements. Third is per diem. The hospital or health system receives an agreed upon amount per patient day with this sort of payment. Per diem was the only method of payment for a long time, but it was cost per dime. The pricing was established by the provider. It's now contractual, but now it is contractual per dime with the payer setting the price. Capitation. The hospital or health system receives a fixed sum per enrolled individual each month, often referred to as per member per month or PMPM or per year, to cover a specific scope of medical services under capitated arrangements. Alternatively, providers may be paid a set proportion of the premiums paid to the insurer on a regular basis. The provider is paid regardless of whether medical services are used, and on the other hand, the provider is responsible for all cost overruns from services rendered. Partial capitation payments cover only a subset of services, whereas global capitation payments cover all patient services. Fifth is payment for performance or P4P and shared savings or risk arrangements. Such arrangements are becoming more frequent, reflecting a trend toward rewarding providers for enhancing the value of their services. Providers receive bonuses or have a portion of their income withheld based on whether they fulfill predetermined performance criteria under P4P arrangements. Quality, cost-effectiveness, and efficiency of care are examples of possible targets. Providers are rewarded with a percentage of net savings made as a result of their efforts under shared savings arrangements, which motivate them to lower healthcare costs for a specific patient population. Providers who participate in shared risk arrangements take on financial risk if they don't fulfill the targets, but gain financial rewards if they do. Next consideration is the payer mixers. Not consideration, important matter. The majority of hospitals and healthcare services are funded by both public and private sources. Large hospitals or services may be funded by over 100 different sources. Accounting for each type of payer is critical to the profitability of both large and small businesses. People need to know what providers charge for payers, which is why transparency is so important in healthcare accounting, especially when it comes to payer mixers. Some hospitals will utilize a charge master or MSDRGS, a medical severity diagnosis related group, to establish the rates. A charge master is a comprehensive list of items billable to a patient or provider. Healthcare accounting can be very complicated process due to the many variables that can go into healthcare cost. Next is multi-entity accounting. It is another important hospital accounting concept. Hospitals are rarely run as a unified unit. Usually, there are a lot of distinct departments. Some services may be provided by contractors or outside practice groups. Non-medical services, such as restaurant or the parking garage, may also be self-contained. Each entity's revenues and expenses must be allocated. These businesses are usually self self-contained and have their own accounting systems. This is especially true if they merge or are long-standing departments that may have purchased software before the hospital adopted a more centralized strategy. Next is allowances. Hospitals rarely get paid in full for the services they provide. The bill may be challenged by insurance companies or patients. Patients may be unable to pay their medical expenditures. This causes a difficulty in accrual accounting since the hospital will record 100% of the money at the time of service, despite the fact that it is unlikely to collect all of it. Allowances are a separate line item that adjusts revenue to what the hospital actually expects to collect, which helps keep accounting statements accurate. Accountants have traditionally used an estimated percentage of revenue as an allowance. Accountants can accurately estimate and adjust allowances using modern accounting software rather than using the same percentage for all revenue. This might also incorporate changing allowance rates based on payer, revenue stream, or other relevant divisions. Expense recognition. When using the accrual technique to recognize expense, a number of timing difficulties arise. The first and most basic scenario entails recognizing a regular flow of invoices for supplies and services that must be consumed quickly in order to provide patient care. When invoices are documented, such transactions are usually reported as expenses. The acquisition of goods and services for which an obligation is incurred but for which the goods and services are used throughout multiple accounting time periods falls into the second category. Consider an insurance premium that is paid on July 1 and covers you or the patient or the hospital for a year from that date. The premium must be prorated if the accounting year ends in December. The first half is current period expense, while the second half is an asset that will be transferred to the expense category in the following year. Prepaid expenses are items that appear on the left side of the balance sheet or the asset side. The third type of expense recognition involves charges for services that have been rendered to the organization but for which no paperwork exists for different reasons. Auditors, for example, completed the 2014 audit in 2015. In order to account for that expenditure in 2014 or 2014, an entry must be made even before the exact amount is known. Accrued expenses are transactions that range from situations where the crossover into a future period is relatively brief to new conditions that will not be explicit until a long time later. Depreciation is another important healthcare accounting concept. Depreciating assets refer to a variety of assets used in the healthcare industry, such as commercial buildings, equipment, technology, software licenses, and IT infrastructure. It provides a better understanding of when expenses occur in relation to income, just like accrual accounting. If a piece of medical equipment is expected to last 5 years, for example, it makes more sense to spread the cost of purchase over 5 years rather than counting it all in the first year. Writing off the full acquisition cost in the first year would artificially lower net income without recognizing the equipment without recognizing the equipment as an asset with future use. You must report both the asset's cost and useful life when accounting for asset depreciation. The depreciation expense for the asset will then be recorded for each accounting period. It's critical that the books reflect that there is a cost connected with having that asset in the years ahead, even though it has already been paid for. The hospital will need to purchase a new one once its useful life has expired, restarting the cycle. The greatest strategy to limit net income swings and match the cost of assets to when they are used is to depreciate them. Credit balances. It is not uncommon for the amount collected from payers and patients to exceed the amount owed. Credits accumulate in the accounts receivable when this happens. Accountants can write outstanding checks to help reduce credit card debt. This is a common occurrence. The intended receivers of outstanding checks have died or are otherwise unable to receive the check in some cases. According to unclaimed property regulations, the accountant must pass over the uncollected funds to the state, to the country, in these circumstances. Healthcare Related healthcare information system. Accounting is a gauge of what an organization has accomplished. In a hospital, this is referred to as a patient care. For effective billing and accounting, a hospital must keep track of doctor and nurse hours, medicines given, and disposable supplies utilized. One of the most important data sources is the electronic medical record, just like what I said earlier, also known as the electronic health record. While the primary goal of these records is to make patient care easier, they also help with the accounting process. The billing department uses the information written on the electronic health records to also help or give information to doctors and nurses on entering the patient information to charts or to their file also. The key is to have a good information exchange. Accounting systems and healthcare systems can be linked when electronic records are used. The billing process can be largely automated with the billing department receiving patient care information directly, rather than having an additional step of data entry when the billing department analyzes the paper chart. In the same way, medical coding and insurance claims processing can be automated. This not only increases efficiency, but it also lowers the chance of human errors that might occur during manual data entry at each stage at the billing process. Hospital accounting system. So this starts when a receptionist greets patients when they first arrive at the hospital. If the patient has an appointment, he or she is simply directed to the doctor's chamber. If the patient does not have an appointment, they are either requested to wait in a waiting area until the doctor becomes available or given an appointment. After a routine checkup, the doctor writes a receipt for the patient, which the patient must present to the receptionist for payment. If the patient arrives in an emergency, he is sent to the ICU and all of the doctors and nurses on duty are summoned. His heartbeat is monitored via an ECG and medications are given into his body to alleviate his pain. Blood and urine samples are collected and sent to a laboratory for analysis. If the situation is too serious to handle, senior doctors are summoned and the patient's guardians are asked to complete responsibility or emergency papers in the meanwhile. The emergency forms contain all the patient's information. The patient is then admitted to the clinic for additional tests and examinations, and his information is recorded in a ward book so that visitors and doctors may quickly locate him. The patient is handed the bill and the case description of his or her ailment after the treatment is concluded. Meanwhile, all of his expenses and treatment summaries are recorded in the temporary patient's book with the payment amount, disease details, case summary, and a copy of the test reports given to the patient for future reference. On the charges collection book used to record all of the patient's charges such as medicine, room charges, test charges, and so on. When a patient visits to the cashier for payments, the cashier records his case narrative, date of admission, date of discharge, medicines dispensed, doctor in charge, total charges, and form of payment in the patient's record book for future reference. The cashier copies the total charges into the daily income book when the patient pays and leaves the counter. The expenditure record book contains all the minor and major details of the clinic's expenses each day with the authorized signature. This book is very important to calculate the clinic's total income at the end of the month. The employee's record book contains the profile of all of the clinic's employees, including doctors, guards, nurses, drivers, and assistants. When a new person is hired, a new entry is made in this book. Salaries range from person to person because different grades of people work for hospitals. Hospitals maintain a book attaining to the salary information of all the employees in the salary record book. The part-time staffs are paid according to the hours they work, and the full-time staffs are paid on monthly basis, and to record their presence, a book called the attendance record book has been issued. All payments from patients, the cafeteria, and the pharmacy are made to the cashiers, who report daily to the accounts officer, who generates a monthly report daily to the accounts officer, who generates a monthly report at the end of the month and records the information in the monthly income book. The clinic has a large number of assets, the majority of which were imported from other countries. The associated receipts are stapled on the same page as the information about them in the assets information book. The supplier information book is a distinct book that stores information about all suppliers such as chemicals, surgical equipment, and assets. The specifics of all transactions with the restaurant and pharmacy proprietors are recorded in the rent collection book. As previously stated, they must pay a monthly fixed amount. The due date, the rent amount, and all other relevant information can be found here. In some countries, there are many social workers who are dedicated to assisting the unprivileged. These individuals donate money on a monthly basis. As a result, a contributor's information book has been preserved to keep track of small personal information about donors such as the amount being provided, the date of donation, and all other pertinent information. Naturally, the number of persons in need of donations is large, so a book entitled Donation Information Book is kept. This book contains the names, financial information, and other personal information of patients who have received financial assistance from clinics or hospitals. The salary record book. This book is updated at the end of every month. When the payment is made to the employees, the total salary given to the staff is then posted to the expenditure book. Staff's record book. This book is required for obtaining the personal details of the employees when necessary. This book is updated when new staff join the clinic. The assets information book is updated whenever new assets are brought by the clinic or the hospital. Patient's information book is updated whenever a patient comes to the reception after the treatment for the payment. Daily income book is updated daily, of course, after all transactions are over and the office is about to end. Expenditure book. Whenever any expense takes place, the record of that expense is written in the book at that very time. The record consists of the cost and amount of expenditure. An expense updates this book with new records. So that are the books that will be used. Main areas to consider is first is transaction processing. When a patient pays the charges for his or her treatment, he or she receives a receipt mentioning the details about the payment. If the receipt production and pay calculation is computerized, then the net charge of a customer can easily be found. Chances of making error by the cashier or the accountant's officer may be very less, and the person would not have to wait for a long time to receive his or her payment. Next is payroll. Part-time staffs receive their pay according to the number of hours they work, while the full-time staffs get their wages according to the time they arrive and depart the clinic. If the system is computerized, it will require less human interfere than needed in the manual one. Next to consider are the accounts. A calculation having the total expenditure and income of a certain period is done to find the profit of that specific time, so that important business strategies can be implemented at the end of the month. All sorts of expenses such as rents, bills, employees' payments, and so forth are studied. So the monthly expense can be recorded. If this section is computerized, the record can be easily entered, sorted, and searched for later use. Many problems are clearly associated with the manual system based on some of the descriptions I've mentioned. It's slow, tiresome, error-prone, time-consuming, unreliable, and inefficient. As a result, hospitals must choose the computer system to solve the mentioned difficulties that are still handled manually, as well as to fully automate the manual systems, subsystems. This system's computer program is projected to save a significant amount of time and effort. The computerized system must be extremely dependable and error-free, such that the authorities sees it as more cost-effective to use a computer system rather than to hire more people. Criteria for success. There are some general specifications of software to use and specific specifications of the software that hospitals must use. Just like what I mentioned on the features that hospital software must have, the very important part is security. Since the data such as income, expenditure, profits are very confidential, to prevent unauthorized people to access these data, security measures are taken. In order to achieve the highest level of security, password should be implemented at the entry level of the software. Such a dialog box would appear when user clicks on the program icon. The user has to enter the valid user ID and password in order to access the program. Now, the main areas to consider were the transaction processing, payroll, and the accounts. Here is a flowchart of the payroll. Systems flowchart showing the payroll process. It all starts from the managing director down to the executive directors, sales and marketing, finance and accounts, HR and administration. Under sales and marketing, there are 3 managers: area sales, showroom, and marketing, as well as in the finance and accounts, the accounts manager, and the human resource manager in the HR and administration. Under sales marketing area sales manager, there is the sales officer, and the showroom manager, the showroom executive, and under marketing manager are the institutional sales and brand manager. Under them were the sales executive for the institutional and manager communication for the brand manager. As you can see, this is the payroll system, shows the admin section of the organization. Next area to consider is the transaction processing. Here is a systems flowchart showing transaction processing. Just like what I mentioned earlier as to how the start of the transaction goes. The patient information is received, and if the patient if this patient needs emergency, if he or she has an appointment, what's the condition, is it too critical for him or her to be admitted. This is the flow of it. Next area to consider is the accounts. The accounts are divided into 2. The accounts process for income. When a patient is admitted, of course, he or she is given further treatment. All the expenses are calculated, reports, history, cases of the patient is also given to the patient. Payment is made and payment is accepted, copied, and recorded on the daily income book. And this is how the income process goes. Next is the expenditure accounts process. There are a lot of expenses in the hospital, so as to visualize how it flows, it starts from reading the income from charges collection book, the rent collection book, expenditure book recording the expenses. Then after, since we read the income and the rent and the expenses, we can get the net income. Net income equals total income minus expenses, of course. So a summarized report is made and income book is updated. This is how the expense or expenditure will be recorded or determined. And that there are a lot of things to consider when building a hospital accounting system. On my discussion, I've explained the general or whole process of it, but there are a lot of specific transactions that also must be made that is really complicated as of now, since our study didn't really focus on hospital accounting, cause most of the time we use the merchandising and manufacturing. But I've did my best, and I hope you have information about the making an accounting system for hospitals. If you have any question, do not hesitate to ask me. That's all. This is Basio. That's all, and thank you.